Alright guys, I wanted to put together a small video of how I would recommend, starting to trade. Where do you start? Do you jump into a course or, whatever. At some point everybody has to learn to trade, and that essentially means, putting money down. You can do kind of those, trade with fake money sort of deals, but it's just not quite the same. It's not as realistic, and so here's a really general layout of what I would recommend in terms of learning to trade and how to start. First thing, I don't care what size your portfolio is. If it's if you have $1,000 to throw in, you have 80,000 to throw in, it doesn't matter. I'm going to recommend starting extremely small, and I'm not going to say a percentage of your portfolio. I'm not going to say no blanket statement that way. I'm just going to say no matter what you're doing, I would say throw $50 at it. $50 is one of the cheapest, education training methods you can have. And actually live trading is going to be the best thing because, any trader that says that they didn't lose money before they started making money is just lying. And so, why not get that out of the way with a low dollar cost? The real trick to it, though, is that you have to treat that 50 or whatever amount you're putting in as though it is, your full amount. That just because something moved 5% and you want to take profit on it, you look at your dollar amount and you say, wow, that's, I turned $50 into, $51. It's like that's still something. You need to not lose that dollar amount, and you need to pay more attention to the actual percentage that you're doing. And it's all just about net gaining in the end of it. And so, with that said, what I would recommend, in terms of learning, kind of this layout that I've got now, which is sort of a dual screen layout, is really all you need. Again, there's ways to really elaborate on this, but I'm kind of trying to start, bare bones here. And what I recommend, stick to a 15-minute or 5-minute time frame. You're not going to be a day trader, but the goal is to, be in as many different scenarios as, you can fit in your time frame. So the benefit of these small time frames is that if you are somebody that works during the day or has other obligations, you're pretty occupied, you encounter a lot more opportunities this way, and so you don't have to take all of them. It's basically a way of not trading 1-hour charts or 4-hour charts where it'll take you years to learn. You try to learn on a 15-minute, 5-minute time frame, and you can pick up a lot of the technicals pretty quick. And so I want to give this, of course we have a little bit of structure going on here. So this is, hindsight 2020 scenario. But let me give an example of, let me see, when I would have woken up this morning. And this is kind of the layout that I would expect, or that I would recommend for a lot of people. So let's see, I was up right about 6 o'clock. All right, let me go to replay. And so essentially what I'm simulating here, ignore the bottom chart for the time being. Essentially what I'm simulating here is, this is what this chart would have looked like when I had first woken up. And so we have a bunch of noise, and so the first thing I would do is go and just look for small patterns to trade, say, hey, it's a new day, I have to go to work later today. Let me see if there's anything that I can be involved in, or at least map out, or, something. And so, okay, essentially what I would be looking at here is what's kind of a rising channel with a little bit of, it's losing a bit of steam here. So actually almost 2 ways to draw this now that I'm seeing it. All right, so again, just kind of getting up for the day saying, I want to make a trade before I go to work if something shows up. And I'm looking at, and you can draw this either with the bodies or, the wicks are a bit extreme here. But I'd essentially be looking at something like this when I first wake up. The way that I said that it could be drawn twice is that this actually, there's no touch here or here. There's no touch on the bottom trend line until there. And so I'll actually add that one in and say, hey, maybe I'm missing something, in this range, and that this was a rising wedge, and this is actually a bearish retest here. We're not going to predict what's going on. I'll leave that as dotted line for now. And so again, the good part of this is that if we're throwing $50 at this and we're saying, I just want to see if this works. I want to see how right I am. Technicals say that we know, where's my thing? Technicals say that we know that this rising wedge at some point should break down. That's just what the percentage is, and so that's what we need to trade. And so there's 2 ways to do it, and it kind of depends on, if you wake up in the morning and you're saying that this is already what's happened, well, then you can probably already buy this bearish retest and say, I think that I'm watching a bearish retest here. But otherwise, you can look at it and you say, all right, this is what I think is happening. I'd like to buy in if we get another swing high, or this rising wedge really builds a little bit longer, or you're waiting for this retest sort of a thing. And so we'll fast forward a little bit just to get the secret out, essentially. That, let me go all the way to the end here. And so at the end of the day, this is actually what we ended up playing out here. And so obviously this wasn't on the chart when I drew it out. And so, we kind of had that same scenario where it's almost a little bit of a fake out, but kind of not, a lot of wicks up here. And so essentially, there's multiple ways you could have played it out. You could have literally charted this and just said, set an alert up here, or just set a buy order at the top of your thing. It's $50. The goal of this is that it is low risk. You're trying to say, if I could have my way, I would have bought this rising wedge at the top of it. And so you can place a buy order there. You can just set an alert so you just make a line here and say, this is where I would have shorted. Again, this doesn't help as much when everything's played out. The goal is to do this before you see the price action. So it's essentially, you have this going on. And let's say that, nothing happens. And let's say this, tomorrow might bring that what happens is, let's say you wake up tomorrow and this wedge has come down and retested up here. It's right in this spot. When you wake up in the morning, you say, okay, well, it's a new morning. I have to go to work, but this is looking really promising here. You said this fits my pattern. This is a bearish retest. I'm going to short this right now. I just happened to wake up. I caught this at the right moment. I'm in. And so if the opportunities aren't perfect, like if you had said, back here, this isn't where I would want to enter. I don't think it's coming down yet. I think that there's more going on here, whatever time frame. Then just don't enter. But the goal is that by charting these 5 or 15-minute time frames, you see a lot more action. And so, these rising wedges, rising channels are things that you see on longer time frames that you'll want to trade eventually when you have, when you want to throw a lot more capital at this. But for the time being, the more of these you see, the better. And I mean, again, if you want to get really crazy with it, you can actually even zoom in on 5 minutes and say, hey, I'm waking up, I don't see anything on the 5 minute. I wonder if there's something on the I don't see anything on the 15 minute. Let me see if there's something on the 5 minute. And you kind of see this, hey, look, there's a little bit of a falling channel here. And you know what? I want to take my gamble on it today. I will just, I want to be in a trade. Throw your $50 into this. It either plays out or it doesn't. Again, what you're seeing is how these patterns play out, but in real time. It's just a much faster way to get more experienced. What this ends up doing is it introduces you to a lot more technical comfort than anything else. Even if, again, so actually here's another perfect example. If you had, woken up at some point, and I'm not a person that trades double tops, double bottoms, but if I were, and let's say that, again, this is all hypothetical, but let's say you woke up, right at this moment, where you're right in here somewhere, and you wake up and you say, wow, I love double bottoms. They always play out on Bitcoin. This is so good. And you end up saying this looks like a whole lot like a double top to me. And so you wake up right here and you're about to go to work and you're saying, I'm not going to see my, I'm not going to see my computer or my phone again for another several hours, but I think this is a double top. Well, then what you can do is, you can just place a buy order right at that, double top neckline that you had drawn. And in this case, it would have gotten hit and you would have came back, from work or whatever, and you probably would have been down in here somewhere and you would have said, wow, I did it. That worked. This played out. And again, it's okay to kind of let that ride, whether this, broke back up and went the other direction or whatever, because again, at the end of the day, it is $50. That's the goal. See where it goes. Ride this $50 into the ground if you have to. It's the cheapest trading experience you'll get. And it's really easy to say, hypothetically, you go to work and you say, oh, I'd buy this retest. And you come back and it played out and you went, aha, of course I would have been right. But, if you don't actually put the money down, or you don't place that buy order, you don't do something, then you just don't get that experience. It's not the same. Your value from it is not the same. And it's really key that before you start throwing money at this market, that you do understand a lot of these things and you do get comfortable with it, because this is what makes it so that when you start trading a large amount, you can actually sleep at night. You can go to sleep with trades open and say, I'm not worried about it. If things go the wrong direction, they're not going to go, to the moon or to the ground. I'm going to wake up and this is just going to be negated in some way, and I'll sell, or, I have a stop loss somewhere or something along those lines. But this is just something I want to get out, because I really highly recommend that everybody starts this way. Trade short-term time frames. And I'm not saying overtrade, but, if something shows up and you say, hey, the opportunity's here, I like this, yeah, do it. And the secondary kind of like last thought that I'm going to leave this with is that I would not recommend throwing a ton of indicators in here initially. If you are somebody that wants to use a ton of indicators, and you really love when people post charts that are totally illegible or whatever, have too many lines on them, that's fine. You can do that, but I would recommend against it. What I would start with is exactly this. I would just start with price action and a volume, and just start from that. I can tell you that my own personal experience, I started with what I'm going to consider kind of the basic package of indicators, which is price, volume, MACD, the MACD histogram, RSI, and the stochastic RSI. It's what I learned on. It's what I think a lot of people learn on. And I can tell you that right now, what I currently use is exactly, I don't know, let's go to a sheep chart, is exactly this. And I will sometimes use this. And so all I use price action, I use an RSI line, and I very, very, very rarely use two specific moving averages. And that's it. I mean, this is, and I don't trade on these. They're just to give me an overview of market, I guess, market structure or market conditions. Again, what you're looking at on the screen right now is pretty much what I use exclusively. And again, I'll occasionally flick on a divergence indicator just so it saves me some time in trying to have to find divergences on my own. It flicks a bunch of different indicators. But again, highly, highly recommend starting simple, making a bunch of trades. Just start charting structures, low amounts of capital. If you wake up and your money is down 20%, you don't care, because you just learned something about that. You just learned something about your technicals that cost you $20. And it's like, that is so much better than putting a ton of money on this. And I guess one last thing I didn't mention is that I recommended this kind of split screen view, because if you're charting some pattern that's in here and you're saying, I want to short at this location, I want to short up here, or I want to short a certain spot, or long a certain thing, you can start doing that with Bitcoin first. But if, again, you're somebody more interested in trading altcoins, you can try to do that with altcoins. Just be aware that, if this comes up in shorts here and goes down, some altcoins might, stay stable. And so while this would have been a win, you end up kind of net neutral here. Just be aware that, like, after you do your trade and you're kind of like looking at the aftermath of it and doing your analysis and saying, did I make the right choice or not? Just be aware that sometimes these things don't work out perfectly, and there's a lot more that goes into that aspect. If you want to keep it as simple as possible, my recommendation, just chart Bitcoin and trade it. If you want to get a little bit more cute with it, do the same exact thing for Ethereum. And Bitcoin will work for your Bitcoin charts. Ethereum will work as kind of trading all of the altcoins. I'm going to leave it at that, but I think that that's where everybody should be starting.